and hearty welcome for all of you for today's breakfast meeting. Today we have chosen topic SA 701, Key Audit Matters. As is the time for all of us to complete the audits fast of all our clients, we felt that this topic is very relevant for the discussion, hence we have chosen this topic. Today we have two speakers with us, CA Ramprasad and CA Vinay K.S. to present on the topic. I request CA CA to kindly escort our speakers onto the dais. I request CA to kindly welcome our speakers by presenting their floral bouquet. Big round of applause, ladies and gentlemen. Thank you, sir. To briefly introduce about our speakers, CA Ramprasad is the practice head for Bangalore office of ASA and Associates LLP and brings with him 30 years of experience in both corporate and advisory roles. A commerce graduate and a merit ranker of the Institute of Chartered Accountants of India, CA Ramprasad is also a certified SAP consultant from Sapien College, Chennai. He has vast experience in assurance, taxation, mergers and acquisitions, besides handling treasury function. His professional award stands testament to his outstanding caliber and leadership abilities. During his tenure with the Big Four, he had added responsibility of developing learning and education workshops and a regular faculty of their assurance training programs. With characteristic self-belief, Mr. Ramprasad also finds time to pursue his passion for Hindu philosophy and classical music. With this brief introduction, I welcome you to today's session, sir. Mr. Vinay K.S. is Chartered Accountant with over 11 years of experience in carrying out assurance-related services like internal audit, statutory audits and SOX audits. He is an executive partner in Bangalore office of ASA and Associates LLP. With this brief introduction, I welcome you also for today's seminar. Over to the speakers.
Good morning to my fellow members and my respects to the senior members of the profession who have come here. And I am humbled by the attendance of some very senior members, and I hope we will do justice to this new contemporary standard which has come to us, Key Audit Matters. With me is my colleague who will also be sharing the session with me. And our basic objective here is to take the session in two parts. The first part will be the theoretical aspects which are covered in the standard, and the second part will be the practical illustrations which I felt would be more helpful to the members when they approach this reporting going forward from 2018-19 when this standard is applicable. So that's how the presentation is structured, and at the end of the presentation definitely we will have some time for Q&A, and we'll be happy to share our views and take your most valuable suggestions into consideration. Yeah. With this, let me move on. Basically, there are in this slide what you see is the scope and the framework. The scope is very clear that it is auditor's responsibility to communicate, and there are 2 points in this slide which are of great interest to us. One is increases the communicative value of the report. Number 1. Number 2, what you also find is that greater transparency on matters where we had robust dialogue with the audit committee members and the board. I think one of the key feedbacks which has been given to the standard setters both internationally was that whilst the audit report had clear framework on management responsibility, auditor's responsibility in the opinion part, what was probably missing was what were those matters which were very significant to the audit process, where you had greater dialogue with the management. What did you do? People are more or less not having great answer to that, which is why probably the standard setters in their wisdom, and I fully appreciate them, have actually brought out this standard. So if you see this word, if you see this phrase, greater transparency on matters where the auditor had robust dialogues with the management, implies that we can no longer say that I have communicated this to the audit committee and therefore I can escape. No, it is no longer going to be that. You can no longer say that I have given a presentation and I am going to end that. It's not going to be like that. So now you need to really put that in your report, and we will see that going forward. The other major aspect in this whole slide is increases the communicative value of the report, where the users, as per standard on materiality, it says that users need to have reasonable understanding of the financial statements and so on and so forth. Yet I think the users don't have an understanding of what is audit and what is significant audit issues and how it has been resolved. So it increases the communicability, it enables them to understand the whole thing better. And that's exactly what this slide is dealing about. And it is our responsibility to communicate is what we tell you. I think whilst key audit matter is the subject matter of this standard, it must never be construed as a substitute for your qualification or towards opinion. It cannot be a substitute. You cannot say that I have given this in the key audit matter when clearly a matter has got to be a qualified opinion. So there is a subtle distinction and there is a subtle challenge here for us as professionals. How do we manage our profession? How do we bring our professional judgment to the fore here? And just to probably highlight one aspect is that in a key audit matter, please let's be very clear that we would have resolved that audit issue. In a qualified opinion or in a modified opinion scenario, and Aglo's opinion, we are in active disagreement with the management. So that's a subtle difference between a CAM and a qualified opinion here. So it is applicable to, it is not a substitute for a modified opinion, neither it is construed as a substitute for applicable disclosures under the relevant gap. You cannot say that I have given this in a CAM, so it need not be disclosed in the financial statements. It has to be a supplementary to your disclosure in the financial statement. So that's a very important point. And another point we will be covering going forward is your going concern today is no more an EOI when it becomes a CAM. So material uncertainty with respect to going concern is today a CAM, not a this thing. And a key audit matter can never be construed as an opinion on individual matters. My esteemed colleague Vinay will take you through some illustrations where you will clearly find that we are not giving any individual or any account balances at the end of the day. We are not going to talk of any individual balances or give assertions with respect to that or our own comfort level there. So it is not to be construed as a new opinion. So these are the basic things as to what CAM is all about. Let's move on to applicability. Having seen the scope, having seen what it is not, it is very interesting for us to probably see what is the, to where it applies. Typically, key audit matter would apply to general purpose financial statements, and it applies to all general purpose financial statements which are out in the public domain. It can be hosted in the website, it can go out to a banker, it can go to anybody. So it is typically applicable to complete set of general purpose financial statements. The applicability is for financial statements commencing 1/4/2018, so it's applicable for 2018-19, and it is applicable for all listed entities, listed either in India or abroad. It is also applicable for unlisted entity if the auditors so choose to put something in key audit matter. And what is not covered what is not applicable, where SA 701 is not applicable is LR report. It is also not applicable when you are disclaiming the entire financial statements. Once you disclaim the entire financial statement, there is nothing for you to actually report something as a key audit matter. So that brings us to a natural corollary. Do I have a CAM when I'm issuing a qualified audit opinion? Yes, we will address that in the later part of the presentation. Yes, you can have a CAM, you can have a modified opinion, and you can have a CAM, you can have a going concern. And so these are the places where it is applicable. Moving on to another question which may arise, which will also cover later, is applicability of key audit matter to tax audit. It is not applicable to tax audit because the implementation guide clearly states so. We will address that also. Moving on to the definition part. So I like to read this definition verbatim. It's also on the slide. Those matters that, in the auditor's professional judgment, were of most significance in the audit of the financial statements of the current period. There are two critical words here. One is professional judgment, and second is of most significance. So both these concepts will explain to you as to what they are, because they are extremely subjective. And in a scenario where we are going to be, confronted with a FRRB review or a QRB review or a peer review, how do we justify our stand that we have taken, both from a professional judgment perspective as also a significance perspective? So those concepts are also explained by us. We will take that in the next ongoing slides. So to repeat, those were matters which in the auditor's judgment were of most significance in the audit of financials of current period. And another important point which you will see there is key matters are those which are selected from matters communicated those charged with governance. So the typical approach that normally we professionals take is, I think which we have been doing so as a regular practice, is to make a detailed audit committee presentation in case of listed entities, followed with a detailed management data. And probably we believe that we have told everything to the management and whether we can, whether our professional duties are over to that. No, it is not. So there is something called the funnel approach, which is also coming in the next slide, as to how do we determine the CAM. That will also we'll take it up as we move forward. So the point is that CAM follows from our audit committee presentations or management data, and it is also to be understood. And the expectation is that merely giving an audit committee presentation or a management letter will not absolve us of our responsibilities. It becomes very difficult for us to tell that I have given M1 and my responsibility is over. We cannot today, in a revised scenario, escape. 20 years back, I have personally issued many management letters highlighting so many points and deficiencies and so many areas, and I am sure all of you would have also had the opportunity to issue one. Today, any reviewer will actually start from your audit committee presentation or your ML and say, how did you communicate this and why you are not taking this as a CAM? The good thing about this standard is that the documentation requirements of the standard clearly states that you have to document why you considered something as a key audit matter. And the good part is that the standard does not want you to communicate why something is not a key audit matter. So to that extent, we are actually relieved. You have to just use your judgment and say why a particular thing is a CAM. You don't have to write why a particular thing is not a CAM, because that is your professional judgment. So moving on to this.
That means whatever you are giving ML,
yes,
everything should appear in CAM?
No, it need not. It need not. So we will come to the funnel approach. All points in your ML need not come as your CAM. You can actually filter it. So we will come to that slide also, how it actually filters down and you actually put that. So just to, I have taken this wonderful slide from Center for Audit Quality, which is a world recognized body based in New York, which actually talks of how to improve quality in audits, working with various universities like Harvard, Stanford, and also various US SEC listed companies. And I felt that this would be appropriate. It's professional judgment, how to document. It talks of many things. Unfortunately, we have a great challenge because we don't often tend to document our professional judgment. I'm sure all of you, honorable members, will agree with me that the professional judgment is formed by us as per of the moment based on facts. But when it comes to documentation, how far we are documenting remains a challenge. And that's what it is. Identify and define the issue, gather facts and information and identify relevant literature, perform analysis and identify alternatives. make the decision and ultimately review and complete the documentation operational for conclusion. So this is not there in the study, but I felt members will be hugely benefited when it comes to documenting the professional judgment and creating evidence that they have applied professional skepticism on one hand and that they have also been able to document their judgment. Both are important for us when we demonstrate to the reviewer that we have been very, very conscious of what we are supposed to do and that we have not erred in our discharge of duties as a statutory auditor of any company. So that's the slide here. Moving on to, there are basically 4 requirements of 701. What are those 4 requirements? One is determining key audit matters. Second is how do you communicate those key audit matters? The standard gives you the methodology by which you need to communicate. The third is how do you communicate with those charged with governance? Basically your board of directors or your management committee or advisory council, whatever name you call it, but how do you address those charged with governance? And the last one is how do you document your work as evidence of compliance with the standard. So these are basically the 4 key requirements on the standard, and we proceed to examine each one of them. This is the funnel approach that we were talking, right? Honorable member raised a question, how do we? So matters communicated with those who are governance flows to matters that require significant auditor attention, ultimately boils down to CAP. So the diagrammatic representation is that we'll have 50 matters. Out of 50, I'm sure we'll have 30 to 40 matters which are mere ML points. That will be broken down and we'll have ultimately 5 points, and out of 5, 2 could emerge as your audit matters. And as rightly given in the definition here, matters of most significance in the audit of the current period, and there are various considerations in determining the relative significance of matter, which fortunately the standard leaves it to the professional judgment of the member. So to supplement what is being told here, you need a really vast experience in determining what is going to be CAM, and you have to be very futuristic when you're determining something as CAM. When you are going to write something as key audit matter, you need to have 2 important things. One, will I be in a position to defend this stand 5 years from now, when probably this matter is going to come up for a review or scrutiny? Second, when I'm going to make a statement, an assertive statement in my accounts, that there is no key audit matter, will I be in a position to defend the statement? So it all goes to boil down one thing, that you need an enormous experience and you need an enormous wisdom being brought in before you put something to your audit report. Because once it is coming, you cannot withdraw it. So, moving on to the next slide. Determining key audit matter is arising out of, there are 3 things here. One is, how do you determine this? There are 3 areas that require significant auditor attention. The first matter is higher assessed risk of material misstatement, number 1. Number 2, significant management judgment with complex estimates and high uncertainty surrounding the same. And the third is effect on the audit due to significant events and transactions during the current year. So these are the 3 key determinants for the key audit matter. So if you were to look at the funnel approach, you probably have to put a tick box approach here. And I would probably think the best idea would be to see whether, first, am I talking of a risk of material misstatement here? Then I put a yes or no. Then second, is it significant management judgment with high estimation uncertainty? I put a yes or no. Third is it a significant event or a transaction during the year which has a significant impact on the financial statements? I put a yes or no. If the answer is no to all these 3 things, and I compare that with my ML, then I can say that probably there is no key audit matter. But we have to be very conscious of before we document and sign it off. Then that goes into the audit working papers file, and that is final. If on the other hand, you find one of these 3 things being ticked, then probably that could, take the shape of a CAM, and then we proceed to see how it's going to be documented. Moving on to this, I paused for a moment here, and we did deliberate what is professional judgment. And you must be wondering, what is this concept of significant auditor attention? And the standard proceeds to define this in the following manner, and I think it's very important. And if it fits into this parameters which are given below, then it is a matter which actually, these are concepts which comes through experience, and I'm sure practitioners like you will probably pick it up in no time. One, it recognizes the fact that audit is risk-based. Today, from a transaction-based audit where we are probably looking at 100 vouchers, all the 1,000 vouchers, to top-down approach where we look at the key account balances and assertions which are addressed and then proceed to the audit. Number two, focus on identifying and assessing the risk of material misstatement. The third important thing is the concept of significant auditor attention demands procedures which are responsive to those risks. Now, there is a, so on the right hand side, on the left hand side of the column, you have got all the risk factors. On the right hand side of the column, you should have your procedures which are responding to those risks, which are addressing those risks. And two more additional points here are, one is obtaining evidence that is sufficient and appropriate. And I'm sure I don't have to, I'm sure that members are enlightened on both sufficiency as well as the appropriateness of the audit evidence. So appropriateness is from qualitative perspective and sufficiency is from quantitative perspective. And the standard proceeds to say that in case of a CAM, because you are probably giving an assertion that there is no modification, the standard proceeds to tell that you need to obtain audit evidence which is very persuasive, either quantitatively or corroborated through third-party audit evidence or through third-party audit evidence. So I would probably give an example here. Take the case of, it's now in public domain, so the large IT company which probably changed the whole dynamics of this profession. The sort of audit evidences which are obtained, third-party audit evidences which are obtained, are probably not appropriate. Now, in the current dimension, because of this onset of this new standard, would it become a key audit matter? In my view, it would tend to become a key audit matter, because we have an audit evidence which is probably sufficient, but certainly not appropriate. So I think this is what the concept of significant auditor attention is all about. So on one hand you have got professional judgment, on one hand you have got the concept of significant audit attention. It has to pass the merit of both this test before you determine something as scam. Now let's move on to what is this higher assessed risk of material misstatement. It says that identifying and assessing the risk of material misstatement through understanding the environment, the entity and its environment, defines a significant risk as an identified and assessed risk, and in the auditor's judgment requires special audit consideration. We can take a very live example which is probably very current. It's a classic example of what the Indian banking sector is going through on the issue of NPAs. Suddenly you find every bank between one quarter which has been reported to another quarter which is now reported, there is a huge swing. And now how do you explain those swings? Probably it's now a problem which is now out in the open, and the sort of numbers which are coming is a staggering one. So to look at it, I need to understand the environment. The environment says that yes, the RBI has come with severe strictures on these NPAs, and that's the key assess risk of material misstatement for me. And my response would be to look at what has been done from a provisioning perspective. How is the bank collating the data? How is the bank making the provision? And that requires special auditor attention. And if I were to apply the special auditor concept, then I would like to look at evidence and probably conclude that it will be done. This how probably this has to be dealt with, and probably this will be documented also. So this is your example of higher risk of material misstatement. Moving on to the next area, which is also determining key audit matters. Areas of significant management judgment and thereby involves complex auditor judgments. Could be your the off-quoted example is from the oil and gas company where you are probably making a decommissioning liability reserve. So how do you make that? It involves huge complex judgments with various experts from oil and gas field doing that. And as an auditor you have to corroborate, then the standard also tells you that you need to come with alternates for that. Probably you need to bring your own expert and see whether the judgment which has been made by the management is appropriate and the computation is also correct. So Vinay will take you through examples which are actually addressing those things. And the third one probably is significant unusual transactions. Example, related party transactions, complex revenue recognition. I like to probably go back and dwell on the same example of the IT company. In 2009, that single call to that investor made all the difference. When the IT company, which was having 55,000, 60,000 employees, suddenly was going into an unusual transaction of a real estate project. So in the current dispensation of this standard, under the current SA 701 framework, which unfortunately was not there, 8 or 9 years back, probably it could have become a key audit matter. The fact that it did not become, the fact that the company was continuing to make advances to real estate companies, which was unusual for a software company business, is a classic example of how the investors were not informed of something significant which is happening in the financial statements. Which, in the current framework of the standard, we as professional accountants have to be very, very careful that when there is something unusual which is happening, which is not in line with the company's business, or which is not congruent to the company's stated business objectives, then it is something that we need to really consider whether this is unusual for me to report as key audit matter, or am I convinced that it is part of the business and then it is not a crime. Here, apart from RTP, you also need to see major outflows of cash, major commitments made by the company, which are not probably in synchronization with the company's stated business objectives. So, and go back to the beginning of the standard, the first slide very clearly said that you might have had a robust dialogue with the management on this. So that also fits into the definition of CAM, and then this actually could be a CAM for you. So if you are not going to report that in your key audit matter in SA 701, you will probably be hard pressed to explain as to why it was not a CAM. So I think members really, a consultative process is very important within the firm. It could be with external peers before we sort of conclude, because the exposure is going to be huge, and we will see the effect of this in the 2020, 2021 going forward, when these reports will be coming to table for review. So these are the things which probably are, I wanted to discuss these three things. Matters that require significant auditor attention. I've explained this concept of significant auditor attention. And now moving on to a classic illustration is that SA 240, which talks of auditors' responsibility related to fraud in an audit of financial statements. It presumes that there could be a management overhead of controls, which is why always the senior members will tell their articles to look for all sales transactions which are happening between March 25th and March 31. Look for sales transactions which are routed through journal entries. Look for month-end pushed up sales, and look for sales return which are coming to you in the month of May, when all the sales probably will slowly begin to come back. So there could be a potential management overhead of controls. The risk of frauds in revenue is a presumable assumption that there is going to be fraud in revenue, and depending on the nature, these may require significant auditor attention, and therefore would be a key consideration for auditors' determination of key audit matters. So there are additional considerations apart from the three that we stated. So it has to pass the three tests. Apart from them, there are many other things which could be an additional consideration for you. One, previous year CAMs, key audit matter. The question is, since we are in corresponding framework, we probably we don't report on the comparative numbers. We are in corresponding framework scenario under the Indian, under the Indian gas. So consider the previous year CAMs, whether those require continuation. My presumption here would be that what was continuing as a key audit matter should continue to be a key audit matter in the year, unless the circumstances change. And my colleague also will take you through an example where the example clearly demonstrates how it has been dealt in the last year. Then there could be another consideration for is matters that pose challenges in obtaining sufficient appropriate audit evidence relevant in the determination. Well, there are two things here. You may have challenge in getting audit evidence, but at the end of the day, you will get your audit evidence. If you get your audit evidence, probably it will pass the test of a CAM. And here we have to be very careful, and there are practical illustrations when probably members will be saddled with audit evidence, probably on the morning of the board meeting, or probably 2 days before the board meeting, and which precludes us from applying proper time and proper judgment as to whether this passes. So most of us are probably caught off the guard because the evidence either comes, at the last minute, which prevents us from really applying our professional judgment and skepticism. The standard also goes to say that matters that pose challenges in obtaining audit evidence, maybe scope restriction may warrant qualification. So if there's a scope restriction, if somebody tells you that, we had a very interesting case, one member was talking to me, and he was telling me that in a large company, they were not allowing them access to the warehouse. And so I asked him 2-3 questions. One, is the warehouse your own warehouse or is it a third-party warehouse? Then number 2, what is the type of stock which is stored there? And he said it is a perishable commodity, and they have done fumigation. And the warehouse is not a third-party warehouse. The warehouse where the company actually is itself is paying the rent. And then I told the member, do you think there's a scope restriction here because they're not allowing you to go to the warehouse? No, they're not telling like that. Then I said, if they're not telling that, then probably we could take an expert in this field, go along with them, ask him to open the godown on that particular day and see whether really those things are there or not. If you're not able to see that, then I think you are probably having a scope restriction here, which could potentially mean it is a matter of qualification, not a matter of key. It may not be a key audit matter. So to sum it up, I have a great challenge in obtaining audit evidence. I have obtained the audit evidence, I am satisfied with it. Then it could potentially be a key audit matter. On the other hand, I had great challenge in obtaining audit evidence. Unfortunately, I am still not able to obtain it, or I am not satisfied with what I obtained. That could potentially be a qualification, or it could be a matter of even a disclaimer, depending on the materiality of such an account balance to the whole financial statements. So there are typically other things which could probably be a gap. Your change of tally system to SAP system, and the opening balance is not matching, uploading which has not happened properly, and so on and so forth could be a key audit matter. I had a case where one member was telling me that in a company where they had a very successful SAP implementation by a large IT company, they had case where there were 256 separate Excel workbooks used for finalizing the financial statements. So then I asked them, what is the purpose of having SAP when you are not able to get a trial balance satisfactorily from the SAP system and you are not able to do financials from there. So the fact that such extensive use of Excel sheets, the controls around them, could itself be a key audit matter for you, because you are not probably comfortable with the financial statement closure process, which probably is something that we carefully evaluate when we do our ICFR testing. So
it means, see, for any instance, say SF 501, you are not able to comply. Your appointment itself is after the post financial year, so you do not take fiscal indemnity response. Or direct confirmation procedures you adopted. You have not received any response. Because in India, it is a well-known fact that you don't get received the response.
Yes.
You adopted alternate audit procedures. Should that form the key audit?
Sir, brilliantly answered, sir. Same standard also, sir. In case of where you are appointed after the date, also gives you an excellent wording with respect to your stock, which is what a very valid question you raised. As far as your other confirmation which probably you could not obtain, my reckoning would be that it could form a key audit matter, because you need to highlight the members that I was not able to obtain, say, probably a direct confirmation from bank. You are not able to even get a walk-in confirmation, and I actually did that. When I was finalizing the account last week, he just requested one of my colleagues to actually walk into a bank and get the confirmation. That could become potentially a key audit matter. It's a very pertinent question, sir. On one hand, you have to very clearly say, the other hand, you have got evidence, but as you rightly said, I could not get direct information, but I performed alternate procedures. So your risk is balance materially misstated, your findings, your response could be, yes, done alternate procedures. Probably, your third-party confirmation with respect to receivables, large receivable. You could have performed alternate procedures like subsequent realization, ongoing sales, ongoing correspondence with them. Those could be your suggested response by you to those stated risks. And then probably you can actually report in your camp saying that we did not find any adverse features in this stated balance. So we will come to that, sir, and that's thanks for that good question, sir. How exactly will be concluded in camp, Vinay will also take you through. So, the other examples are importance and materiality of the matter to the users understanding. We have a great challenge, taking the same example from the banking sector. We are having situations where today chartered accountants are called upon to give certificates on utilization of funds from banks. A great area of risk for us, because money is fungible. We don't know what is the color of the money. Money is not parked separately. Suddenly you find a 250 crore term loan being released, and you find the company is struggling to give you justification for the 250 crores. So how it has been utilized, whether it's gone to the intended user of the as per the loan, or is that been diverted. Just imagine, all these cases that you are reading in the press today. Had this been there, probably could have been a key audit matter from the auditor, and he could have highlighted that yes, these monies were not put to use for the intended use, and probably would have been highlighted. So, management selection of accounting policy, then it depends on the nature, complexity, subjectivity, and comparison with industry policies. Your classic case will be your one major standard which is also impacting us. India is 115. India is 115 together with the CAM could be a very important combination for the users going forward from 2018-19. Then corrected and accumulated uncorrected misstatements, and then the extent of audit effort, specialized skill required outside the engagement team. A classic case here would be, what is a key audit? It would be a large income tax dispute, where probably you, apart from consulting your own in-house colleagues, in-house professionals, you have taken the expertise of a couple of senior legal counsel, and in your view is so the issue is so nebulous and so fundamental to the user's understanding that you may actually want to tell the user that whilst I am satisfied that the provisioning is adequate, or whilst I am satisfied that the stand taken by the company is appropriate, I would still like to put this in the audit report so that you are cautioned and you are entitled to take your own judgment. So that could become a key audit matter for you, where probably your description of the matter, your consultations with such senior counsels, obviously you cannot put the names because standard precludes you from putting the name, but you can tell them that how you have concluded that. The severity of control deficiencies identified. If I were to look at the audit report today, the two parts which are there. One is the main audit report, the other is the CARO, the other is the ICFR report. I would tend to think that if you have given a disclaimer in ICFR report because the company's controls have failed, yet the standard does not preclude me from issuing a financial statement opinion because I have done alternate procedures to ensure that the balances are correctly stated. I think here the fact that the disclaimer of an ICFR report means there is a severity of control deficiencies, which in my view could warrant to be a key audit. It's again a matter of professional judgment, but in case you have disclaimed the ICFR report, you can probably consider giving that as a key audit matter in your report. So the severity of control deficiencies also could be a matter of is what the standard goes to explain us in the FAQs. And where the matter involved a number of separate but related auditing considerations like revenue recognition with long-term contracts, litigation and other contingencies which have an effect on accounting estimates could be the determinants for your audit matter. So to put it in a nutshell, determining the key audit matter is probably the heart of the standard. There are three basic steps for me to do it, and I need to talk about two important things. One is the concept of professional judgment, how did I exercise, what is evidence for it. The other important thing is how do I evidence concept of significant audit attention. I think if you put this in one framework, I think the standard, probably the heart of the standard is complete. Moving on to communicating key audit matters. So the point is, these are the things I said, determination, communication of key audit matters, then communicating to those are governance and documentation. Communicating key audit matters, how do I communicate, how to describe the communication appropriately, what not to communicate and what not to describe under CAM, and how to communicate when there are no CAMs. So these are the five questions that we seek to answer in the ongoing slides. We probably have to, how to communicate. Well, there are three things which are required in communication. One is definition of key audit matter will be standard thereof. Then, under the separate section titled key audit matters, it will always be placed after the opinion paragraph. Vinay will take you through all those nitty-gritties. there will be a separate introductory para where you will actually define people what is the audit matter and how they were addressed in the financial statements. What not to communicate. The auditor shall not communicate through key audit matters where he is required to modify his opinion. So we have to be very, very cautious, You will be under pressure from management, I can assure you, that whilst you in a professional judgment you would have formed something as a qualification, the management will push you hard to tell you we will give you this evidence, we will give you that evidence to ensure that it becomes a camp. So my take on that would be that we have to be very, very careful, and senior members will agree with me that the pressure which is being brought by management nowadays is so immense on us. So we may be colored by more additional evidence, we may be colored by more third-party papers, but we need to be very cautious before we take that judgment. And then, as a result of that, either in accordance 705 or 7 or going concern issue, it could be a separate CAM by itself, and therefore key audit matter is not a substitute for modified audit opinion. So that's a point here, what not to communicate. In essence, you will not communicate a qualification through CAM. How to describe communication appropriately is through cross-reference. Why it is a key audit matter? Now it was addressed. So why and how are very important here. Cross-referencing to your financial statement disclosures are equally important for you. And let us go into each of these items to see what they are. There are 2-3 things which are very important. One, when you say description, the adequacy of the description is a matter of professional judgment. Okay? And my recommendation here would be that I think we should not write too much. At the same time, we should not write anything brief. We have to write adequate. So English, somebody was commenting to me that with this camp, our English writing skills will actually improve, will actually come into forefront. And I entirely agree with him, because what you choose to write actually will be taken by a legal counsel, and he actually can cross-question us in any forum tomorrow. And so that's very important. So adequacy is very important. Adequacy of description. The second is we should not use too much of auditing technical terms, because the user, probably the reader, is definitely not as proficient or is not expected to be proficient in essays like us. So that is limiting the use of high auditing technical terms. The nature and external information provided by the auditor is intended to be balanced, has to be balanced in the context of the responsibilities. I would, most of the times nowadays, what we see is some of the auditors are actually, we find some of the reports, some of the emails where the auditors probably cross the Lakshman Rekha and probably either are vouching for management, it could be potentially, or probably we are talking on behalf of the management. So the CAM should never be seen as something that we are representing on behalf of the management. It has to be objective, and no subjectivity could be there, and that's a key point out here. So the cross-referencing is, to put it in one liner, the cross-referencing is to the key disclosures which are given in the financial statements. And if you see some of the camps which my colleague will be taking you through, there will be cross-reference to the concerned note in the financial statements. So when an entity includes robust disclosure about accounting estimates, the auditor may draw attention to the disclosure, the range of possible outcomes, and how and why the matter was, addressed, why it was considered as a key audit matter. The standard also proceeds to give us one more very live example. I think it's a very beautiful example, ongoing concern. Whilst professionally you would have taken a call that this company, despite the material uncertainties which surround it, still is a going concern from a cash flow perspective, because you are cash positive over the next 12 months, and that you are actually able to meet your commitments in the next 12 months, and you will not be technically defaulting in your payouts in the next 12 months. The standard proceeds to say that you find one of the material uncertainties is so important, kindly bring that in cap. It could be something like significant operating losses. It could be something like your covenants not being met. It could be something like your your refinancing, which has still not come to you. So those, whilst there are mitigating factors surrounding the same, whilst you have audit evidence to say that they need not warrant a CAM, it could potentially be a situation where you could cross-reference and give you are mattering the audit report. That's what the standard goes to explain.
Sir, here, SA 570, the going concern concept, SA now as a separate head.
Yeah.
Should it form a separate head or should it form under
It
CAM?
should be a CAM, sir. It will be a CAM.
Part of CAM.
Part of. And as you rightly asked, now if you don't want to give something a going concern assumption because you are comfortable the next 12 months to 18 months, the company has got enough cash reserves to meet all its obligations. It proceeds to say, if there is one material uncertainty for you which is still continuing, that could potentially form part of your CAM, like your substantial operating losses, like your e-commerce companies today. Most of them still continue to be in operating losses. You could still say that yes, it's a market strategy, it's an entry pricing strategy for us for the next 18 months as what management has told and approved by the board. And we are comfortable that the company has enough cash reserves to meet its obligation, could be a potential. Then, in describing why a particular matter was considered one of the most significant, in describing why, it may be useful to highlight the aspects specific to the entity. So I think that's very important. And relating directly to specific circumstances of the entity may help minimize the potential descriptions being overly standardized. The idea here is that the standard does not expect you to keep repeating the same language year on year. Very, very, very careful. You can't expect to have the same, some of the notes in our financial statements typically are being repeated. Could okay, right, this year we have seen that, let's see this next year. I think the chances of such positions being taken by us will be very limited going forward. Because you need to justify why you are standardizing this. So that's why the phrase which is used is overly standardizing. We can't be overly standardizing. And this is also important describing key audit matters that recurs over periods. So that's what I was trying to tell you, that there cannot be any standardization here. And the example, off-quoted example is about oil and gas, and that's one industry which is easily referred. How a matter was particularly addressed, we'll take you through more illustrations which I think will actually enlighten us as to how beautifully the auditors have addressed. But to put it in a nutshell for us is the amount of detail they provided and they describe how the audit matter was addressed is a matter of professional judgment. And number one. Number two, the overview of the key risk, the auditor's response and the outcome should be elaborated in the key audit matter is what probably the standard wants us to do. And there are two, three important things. One, we should never leave any sentence in CAM open-ended. That means we have to be conclusive. Number one. Number two, it cannot be subjective. Number three, it cannot be opinionated. It has to be simple, accurate statement of facts, nothing beyond. So I think this is how your addressing of a CAM should be. So we will come to some illustrations as we move on. And the related disclosures should also be given. And if you see the last line in the slide, does not contain or imply discrete opinions on separate elements of financial statements. That means you should not give any chance for interpretation by an advocate. So I would always think when I used to clear qualifications and write qualifications, I always visualize myself standing in a courtroom 5 years from now and trying to defend my audit opinion. What is it I have done? What are the papers I have? Am I in a position to defend my audit? I always tell people, don't visualize today. Visualize a scenario 4 to 5 years from now when you are going to be confronted with a different set of professionals who probably will be ripping apart your report waiting for the opportunity to put you down. So the last word is probably very critical. It should not imply discrete opinion. It should not represent forward looking statement of the management. It should not say as represented by the management can never come in a CAM. More often than not, we often take, people tell, okay, we'll have a general, these things I keep hearing nowadays. There will be something called general letter of representation. There is something called specific letter of representation. So I was always clueless as to what this specific letter of representation. Then people told, that is to address this particular matter. I think between you and me, those days are all gone today. There cannot be any concepts like that. That specific LORs can never be a defense for us in any forum tomorrow. Unless you document how you have obtained audit evidence and you have concluded that matter. So I think these are critical things for us. And
Excuse me.
yes,
Sorry, the reference of separate elements in the financial statements.
separate
The statement is actually in fact discrete opinions and separate
elements means, it cannot give an opinion on letter, it cannot be an inventory, it cannot be anything like that. Yeah, that is the point. That's why I said it can never be opinionated with respect to a particular balance. Because you are talking of financials as a whole. Yeah. What is not to be described in CAM? The auditor shall not describe in CAM if there is a prohibition by the law and regulation. The second is where such a disclosure is bound to cause adverse consequences to the company. And in all fairness, I think we have to respect that. And we need to get a specific representation from the management, duly minuted in the board, as to why such a disclosure will cause harm to the company. So whilst you are entitled to take such a decision of not putting something in CAM, and it is better for it to, and you have to always back it up with a strong representation from the management that if you put it and if I give a disclosure to it, it's possible to affect me. Hence, I'm not giving that. This will not apply where the company has already gone public with that disclosure. Yeah. How to communicate when there are no CAMs? I think it's very simple that you need to just give a statement that we found there are no CAMs. And I want to put a word of caution here. The standard setters have been very clear. They are expecting us that in case of listed entities, very rare circumstances there will not be any CAM, which essentially means the standard setters expect us to put minimum one CAM in every listed company audit, because there could be at least one key audit matter in every listed entity. So while that is the expectation, so when you are in a listed entity situation and you are putting there is no CAM, I would expect that there are no operations or the company is defunct or the company is probably a holding company or a shell company. But if it's a company with some operations, etc., I would tend to think there cannot be any report without a CAM. So that is what the expectation of standard setters also. So members are urged to exercise caution in this regard. So we are actually today, if you see, we are actually caught in the Damocles sword is actually hanging on our head. If you put something in CAM, you have to be thorough. If you don't put something in CAM, you have to be more thorough as to why something was not considered. So actually the responsibility of the members in case of listed entities has enormously increased, and there is no more question of you send an article and get it job. I don't think it's going to be possible. You have probably the signing partner himself has to spend enormous time today at the location to figure out whether am I right in exercising this judgment, because at the end of the day it's you who are going to represent to the public. So communication to those charged with governance, those matters that the auditor has determined to be key audit matters, and in case there are no key audit matters, that also can be communicated with those charged with governance, which is typically your board. And the last of the requirements is the documentation requirements, which I think we have covered in enough depth over the last few slides. For matters that require significant attention, the rationale for such determination should be documented by us, including exercise of judgment. When there are no key audit matters to be communicated, the rationale for such communication should also be documented by the members in their audit working papers file. And when the auditor decides not to communicate key audit matters, the rationale should be that yes, there is adverse consequence and this is the representation. So in all the cases, your rationale should be very well documented, and you cannot leave these work papers open. You need to put a conclusion very clearly that this is the work I have done, this is the conclusion I have taken, and this is and it is signed off typically a day or on the day of the signing of the audit report. It can never be done after the date of signing the audit report. Be very, very cautious on it, because if you by chance date this after the audit report date, we are liable to be questioned that your entire exercise of professional judgment is wrong, or probably you are only documenting, and probably we can be taken to task on that. So this is our documentation, and there are these additional pointers from this implementation guide. It should come after the basis of opinion para, and we have enough illustrations there, and let me move on to So I think I will leave the There are typical matters before we end as to what are the typical key audit matters. Could be on revenue, could be on mitigation, could be on inventory, could be on provisioning, could be on contingent liabilities, and so on and so forth. So what I think we will now do is walk the members through some illustrations and how this is being documented, because I think to me that represents the finality of the work. And with that, I think I will leave the forum to my colleague Vinay and request him to take us through the FAQs and the presentations, and we will be happy to answer as we move on. Yeah, over to you, Vinay.
Thank you, sir. Good morning, friends. I think now we've got a fair bit of understanding about the standard. Just a couple of points which I thought I should actually let you guys know. One is that this particular standard is effective 1st April 2018. In case if you missed that point, all financial statements periods starting from 1st April 2018, and it is mandatory for all listed companies. What about unlisted companies? It is voluntary. That is, we as auditors have all the liberty to actually report this. So that's a very important point to be noted.
Is it mandatory for those associates or joint ventures, subsidiaries?
Consolidated, yes, it is mandatory. So if CAM is applicable for the main company, that's a listed company, it is applicable for the consolidated financial statements as well. So if to address this particular point, I think there is one particular question in the FAQ, so we will take you through the FAQs. So moving on to the FAQs. First FAQ is whether this applies for interim financial statements or an auditor does an audit with respect to the SEBI regulations, regulation 33 or 52. The answer is no, it does not apply. It is applicable only if complete set of general purpose financial statements are prepared and if they are posted on the company's website. Only then this particular standard is applicable. Moving on to the next one. As Mr. Ramprasad earlier mentioned, is it applicable? Let's say certain companies could have different accounting years other than April to March. So for the purpose of tax financial statements, we may be preparing financial statements and we may be auditing them. So is it applicable for those? It is not applicable for financials prepared only for the purpose of income tax. 701 applies for audit of listed entities, the status of listing. So what is the status of the listing? As on the date of the reporting period, if it is listed, only then it is applicable. If a company is in the process of listing or if it is delisted during the financial year, this is not applicable. When an auditor disclaims his opinion,
if the listing is suspended,
even then, as on the reporting date, it should be listed.
the listing is suspended.
So, I would consider that we have to report, sir. It is standard to be applicable, yes. Because it is still not deleted from the
Complete not listed.
Yeah.
Mr. Ramprasad mentioned certain cases where, let's say, there could be a disclaimer. Now, what happens if a disclaimer of an opinion is given on a financial statement? Is communication of CAM still required? There are two scenarios. If an auditor completely gives a disclaimer opinion on the financial statements, it is not required. However, specific components of financial statements, if it is disclaimed, and for the rest, if there is a qualification, still a CAM is required. So this listing could be either in India or outside India. If a company is listed in India or outside India, CAM is still applicable. Another important question is, since the CAM is related to the current period, can the same be different for different years? It is unlikely that the CAM is different for different years, because generally, as a matter of professional judgment, we look at all these possible material misstatements or risks that could arise, and it can't keep varying every year. Generally, it should be constant. However, it is possible that in a particular year there could be a new item that has come in. Let's say the new transaction that the company has entered into. In that case, it would come as an additional or a new CAM. Is it possible for different entities in the same industry? That's a very nice question that is put in. Is it possible for different entities in the same industry to have different key audit matters communicated by their auditors? Ideally, it again depends on circumstances, it depends on the companies, but it is possible that certain industries could have similar issues. For example, there could be an inventory provisioning issue for a particular industry. which is standard. I mean, there could be a lot of significant estimates and management judgment that is involved. So in that case, it could be there. However, it is not mandatory that it has to be uniform across all.
Another thing, then alternate procedures are there. Like, let us take the pharma industry. Samples. The samples, what is it? One method is free samples are given, it is not taken to inventory at all. Other approach is samples are there, I do take into, as and when they are distributed, that time I charge.
Exactly.
Both the methods are permitted.
Exactly.
So that should form as a
Correct.
limit.
Exactly. This is a very good example. The pharma industry, I think there are a lot of issues there. Is there a threshold for a number of CAM that needs to be communicated? Obviously, I mean, we can't have a threshold for the number of CAM that we need to report. But it doesn't make sense if you have a long list of CAM in your report. It means that, I mean, basically CAM is what? It's, as Mr. Ramprasad mentioned, it's a filter approach. You have 50 issues, it boils down to, let's say, only 2 major issues which need to be reported. So obviously, the audit report would be sensible. I mean, it makes some sense if you have, I highlight only the key audit matters and not all the issues. Whether CAM sections required to be given in cases where no CAM has been determined. Even when there is no CAM, it has to be specifically highlighted and say that there is no CAM. Should conclusions, this is a very important point, should conclusions be provided for every key audit matter? It is not mandatory. We need not conclude. We just state the facts. Does the auditor have an obligation to communicate to those charged with governance the key audit matters? Definitely yes. We need to communicate to the management about the key audit matters even before the same is reported. Whether the CAM is there or not there, the communication has to go. What are the documentation requirements to be maintained by the auditor? This is again an important point here. What are the documentation requirements to be maintained by an auditor? Matters that require significant auditor attention and conclusion are the same, whether it's a CAM or not. The rationale that there are no CAM or not to communicate, if there is a requirement that the same has to not be communicated in the auditor's report, even the same has to be documented. As Sir mentioned, we need to obtain a management representation to back up. So, addressing Sir's question on the consolidated financial statements, how should an auditor address the requirements of 701 in case of a consolidated financial statement, especially when 701 does not apply to some of its components? So, there could be 2 situations. When the parent's auditor is the auditor for all the components, so you have to take the call. If the parent's auditor is not the auditor, then rely on the work of another auditor. That standard would come into picture, and still you will have to take a report. In case of joint audits, how should the joint auditors address the requirements? Right, beginning from the planning stage, CAM should be identified, and accordingly, audit procedures have to be followed. If there are common areas, then joint reporting is allowed. In case of disagreement,
In such stages, how can you identify the CAM?
because we know the risk, we actually in the initial planning stage we identify risk. So obviously, we will, and as when the audit progresses, it comes down.
Progress, okay.
In the planning stage also we can identify and
Yes.
tune our procedures to it. Sir. It is possible, as you rightly said, that something which is not identified as a scam in the planning stage could suddenly come because of a significant event or transaction during there, which is the third determinant in determining the key audit.
So even in case of disagreement between the joint auditors, they can issue separate reports and still report the CAM. These are some of the examples for CAM. Generally, wherever there is a complex calculation or an estimate involved, where there are provisions and contingencies, taxation matters where multiple tax jurisdictions are involved, as impairment assessment, IT system controls, these are some of the common things that the implementation guide has given out. Moving on to the illustrations. So basically these illustrations, this particular thing was actually the international auditing standard was already implemented in July 2016. So these have been picked up from various companies which are listed in the London Stock Exchange, and these are typically the matters that have been reported. For example, revenue, intangible assets, litigation, these are the points which we just discussed. So moving on to the first illustration, what we've actually done is we have verbatim just picked up the key audit matter that is reported. This is how it is reported. So basically the key audit matter definition is a compulsory disclosure that is required. What a key audit matter is, that needs to be reported. That is not given here. The standard definition of key audit matter has to be reported. That has to be the first para, followed by the basis or what the risk is. So, for example, Mr. Ramprasad mentioned about cross-referencing. That is one of the key components of CAM. We need to cross-reference. So, the first para, if you see, it says refer to pages 122 and 123, and then again page 126. So, references to the notes to accounts, reference to the accounting policies, and also references to the management, director's report. That is also required. It's a very key essential thing. It improves the communicative value of the audit report. And then the risk. What exactly is the risk that was identified? So in this particular case, this from Rolls-Royce annual report. In this particular case, the risk is with respect to the revenue and the profit recognized with respect to sale of certain engines and the after-sales contracts that the company entered into. So there is a risk that the company could end up accounting for a higher revenue. So that was a risk here because it involved a lot of complex calculations. So what was the procedure that the auditors carried out? So the response here is, our procedures included analysis, looking into the transparency and testing the application. And they also give a findings paragraph. So this is typically a standard key audit matter that is reported. First you define what is a key audit matter, then you tell what is the risk that you identified and what is the response, what is the approach that you followed by the findings. Another point to note is, you are not supposed to give an opinion on any of these key audit matters. You can't give an opinion. You just state that we didn't find any adverse findings. That's all. You can't say that this is a true and fair this thing, or you can't give any opinion on this particular matter. So this is a compressed version of the same illustration. So the left hand side, if you can see, typically that's how some of these companies are actually reported. The left side they highlight the risks, and the right side they highlight the responses.
To supplement what Vinay is telling, I think this could be a classic example of how we need to document in our audit reports. This is a risk, this is a response, and here probably I give a hyperlink to the work paper, and then my work paper is actually complete. So the whole work paper on CAM could probably be in a tabular column like this, and if you give a hyperlink to your work paper here, that really clearly demonstrates the amount of professional work that you have put, and would be greatly helpful at the time of reviews.
And also adding on to what Mr. Ramprasad just mentioned, I think all the audit observations also we need to have a track of whether it could be a potential CAM or not a CAM. That needs to be also tracked, because there is a possibility that at the planning stage you could have identified certain CAM matters. However, during the course of an audit, there could be some matter which may not have an impact on your financial statements. It could just be a deal that the company has just entered into or whatever, but there could be a potential effect in the future period or on the current financial statements as well. So that I think we need to have a track of the same.
And Vinay, sorry if I'm interrupting, just for this thing. I think the judgment of whether, as he rightly said, in the observation tracker, whether you want to put something as CAM, should never be left to probably a professional assistant. It should be done and decided only by the signing the engagement partner or somebody at a very, very senior level. Because if you inadvertently put something in an observation tracker as CAM and you have not disposed it off, it is possible that could become an exposure for us and later. Yeah. Sorry.
So this question is that one of the things which you've already said is that audits have already moved into a risk-based approach rather than transaction-based approach, which will mean that risks are already identified, and all this will translate into key audit matters somewhere, because that's the one which is getting audited in full sense, which is there. Will it mean that the entire audit report is going to get translated into a larger audit work paper or a content to say all that which we have verified into a transaction rather than actually giving a gist, which means that usability value of our audit report will start depreciating because you're giving a lot of communication out.
No, actually, to put your question, your concern is correct. Your concern is very valid when you don't have the funnel approach. If you don't have the funnel approach, what you are telling will be very valid, because you will have to put the entire 50 points in your ML today in your audit report. But because you are having the funnel approach, you will probably, that is why the concept of significant auditor attention has come. If you are going to put everything in your audit report, as you rightly said, the whole value decreases. It is just, a mere, it becomes sheets and sheets of paper, which I'm sure after second paper, the user will never ever have time to create. So that's why this funnel approach is coming. That is why the concept of significant audit attempt, which is what we explained, comes into place. And that's why, as you rightly said, this is going to be risk-based, and we are only talking of a particular risk, and within that, our strategic response and what are the procedures.
The second thing, sorry, just ask one more question on that. As auditors and with respect to management also, in case of there are any conversations which happens, particularly with respect to estimates, auditors insist when management also discloses as part of the notes to accounts which is there. Auditors drawing reference to the same notes to accounts in some cases is already drawing, even in an unqualified report also draws reference to notes which are there just to capture attention of the users. With CAMP, we have to again draw attention to it and a replica of a lot of items which are coming in the notes back.
That's exactly the point, remember, which you find. In the earlier, the 2 slides before, he clearly said refer para so and we are not going to reproduce it. But we will definitely be referring to it. Because, as you rightly said in the example that you are asking, management has done their own estimations, but I am also going to engage my own evaluation professionals and probably come at those estimates to see whether there is reasonability in the management estimate, whether there is a management bias in the estimation. I like to see whether the estimation is unbiased and whether there is no, element of bias. So that's the point. And to that extent, your procedures need to understand.
And also, just to add to what Sir just mentioned, the cross-referencing, the importance of cross-referencing is the user can actually refer the accounting policy. I mean, irrespective of whether he is technically capable or not, he can at least refer to the accounting policy and additional disclosures that have been given, relate all this, and then in that context he can read the key audit matter. That's the perspective. So this is pretty much how the key audit matters are reported. Now this is again going on to another pharma company, AstraZeneca. Similar, peculiar issues facing the pharma industry again could be on the returns, as Sir just mentioned, pharma industry. So these are the risks. This particular company, the risk was about large deductions or accruals with respect to returns that needed to be provided, which could have a huge impact on the revenue reported. So here, what is the response that the auditors have actually performed, procedures that the auditors have performed? They have actually done the control testing. So what ICFR or whatever IFC testing that you do, if it is a significant component, you will have to also supplement the key audit matter paragraph with that testing. What are the procedures that you perform? So that will also come here. That is one of the points that they have addressed. Then, if there is a management assumption being used, testing the management assumption, validating them, comparison of the assumptions with historical data, analytics. So all these things that you actually perform have to be actually listed out and reported. And then you give your findings saying that you do not identify anything material in the statement. This is again an interesting thing on the intangible assets. So basically the risk here is that the intangible assets, the future cash flows and the assets, there is a risk is that the asset could get impaired because of the cash flow issue. So here again the main concern is about the estimates that the management is using and the assumptions that they have followed. So what exactly is the response that the auditor has done is they are focused on specific assets which individually are significant. So there could be hundreds of intangible assets, for example in case of a pharma company. And in this particular case, they have identified specific individually significant intangible assets and which have lower level of headroom, which means if there is a slight change in the assumption, it could have a huge impact on the estimation. So, and they have identified only specific cases and then they have done the assumptions testing. So when they have done the assumptions testing, they have also checked, validated the assumptions that the management have taken, what are the long-term plans that the management has considered, validating that with relevant work papers and documentation of the same. And they have also done an independent analysis, for which you need to use a work of an expert. So which again the relevant standard will come into picture. Similarly, in case of litigation, litigation is also one of the common points that have been reported in the camps abroad. So litigation, when there are multiple litigations and they have the outcome of the claims are really uncertain, and when there is a lot of management estimate involved, that is again when you actually do a report it as a cap, and these are the procedures that are being followed. So have a discussion with the in-house counsel, document them, also take an opinion from an external legal counsel, take confirmations from them, and then report your findings. Some of other illustrations that are there. What I will do is I will actually take you through one of the this is again a media company. So this is a report. So you actually find a lot of CAMs in 2017 and 2018 being reported. So you can actually see, I'm not sure if it is visible. Yeah. So this is typically how a key audit matter is reported. On the left hand side, this particular expense is a key audit matter, and the right they say how the scope of our audit responded to the key audit matter. So definitely the audit reports are going to be lengthy, that is for sure. Lot of content is going to come in, but again depends on what is to be coming into the CAM. In the end, you give a key observation.
Excuse me, sir. Is there any example where there is a qualified opinion which will be provided and how it gets referred?
Yeah, I think just to address that.
Because saw a lot of examples where it is only when the auditors concluded that there is no observation.
Probably,
Right.
Vinay, can I?
Because it's a listed entity now.
Sure.
Sure.
I'll take the liberty of
Sure.
requesting Vinay that whether I can answer this question. I think you will, I mean, these are very large MNCs, and you will rightly will observe that the chances of a qualification are extremely rare in these situations. Now, if there was a qualification, no, I'm okay with it. I think I'm audible.
You are audible, yeah.
We are audible, don't worry. Yeah, but, so if there is a qualification, actually you will have a basis for qualified opinion para, and in your CAM you will write, apart from what has been stated in the basis for qualified opinion para, we have identified additional following matters as CAM. So a qualified opinion para by its very nature becomes a key audit matter. So the word which will be apart from what has been stated by us in the basis for qualified opinion para, the following matter additional matters. It could be entertainment program expense, so on. That's
So
all.
again, there won't be a repetition. You don't have to again talk about those matters that you've already qualified. You will
So
say
that's
apart
what
from
apart from it, in addition to, we can add either of the phrases which is comfortable for us.
But in CAM you also identify risk and what are your control measurements and everything else.
Correct. So basically, for example, just to answer your question.
You will never put that in your qualified opinion.
Yeah.
Because in a qualified, that's exactly the beauty. That's what I was trying to say. In a key audit matter, you are in concurrent with the management. You and management are in agreement. You have got sufficient appropriate audit evidence with you to conclude on the matter. It passes your test. In case of a qualification, you are either having insufficiency or inappropriate audit evidence, and there is an active disagreement between you and the management, which is why that particular element is getting qualified. So that's the subtle difference. And that's
Just
the
to further answer your question, imagine a scenario where there are no qualifications and you only have key audit matters. Your opinion is still unqualified. Correct. So basically, when there is a CAM, it means that on those matters you don't have any qualification. So that's what Sir just mentioned. You are in agreement with the management. However, if there is a qualification, besides that, these are the key audit matters that we have. So,
Sorry, the scenario is different. If there are only qualifications, there are say 2 qualifications which is there in the report. Will the auditor go and say that except for those 2 qualifications, there are no further matters in CAM?
Exactly.
Absolutely, you will put that in CAM.
yeah. So whether there is a CAM or no CAM, there has to be a CAM header. You need to say that there are no CAMs.
If you want to conclude that there are no qualifications, that's a different. But what are the matters which a shareholder or any investor want to see, and they may raise a opinion that this may have an adverse opinion, but we have observed that they need not lead to adverse opinion. That's what the significant key.
Exactly, correct.
Is it not?
Correct. So because you are also giving your responses
Exactly.
You identified this as a risk, however you also performed your procedures and finally you give your findings,
Exactly.
which means that you're okay with it.
That's why you are always in sync with the management.
Correct.
But it's a matter to be observed.
It is a matter which you need to address to the users of the financial statements, because you feel that this has to be the reader of the financial statement needs to understand that this is one of the key audit matters. So this is typically how CAMs are reported.
I think CAM need not be a qualification. CAM is a new concept in auditing, where it says earlier we used to prepare the accounts and give it, and some requirements like related transaction done. Now, auditor is required to bring out some key points. It could be a marketing point, it could be a sales point, manufacturing point, or the documentation or anything. People should be aware these things are happening. And also, auditor will substantiate, this is the key point, this is the risk involved, and this is what we have done, and this is what the company has done, and we are in agreement with it.
Correct.
So, it's kind of, giving the information to the public or the reader or stakeholder that please be aware these risks are there.
Absolutely.
Like for example, one of the points we mentioned in the, I forgot the name, Rolls Royce, I think. The most complicated thing today in every industry is that how do you take care of the post-sales maintenance? Okay, there are different kinds of services in that, and different people have dealt it. Now today we are going little ahead. I mean, Companies Act or whatever it asks for, don't say that all this is there, but tell us which is the key factor and what you have done for them. Thank you.
Can we conclude in one way that this CAM reporting actually enhances the auditor responsibility? Earlier you could actually you can take the shelter and say inherent risk is there which are not addressed yet.
Correct.
But you not are addressing and you are claiming that you are already in sync. There is no way to escape.
Because the responsibility is more, because now you actually have to say that there are no CAMs.
Exactly, it is enhancing our responsibility because we are holding out to the public.
Correct. Because if you say that there are no CAMs and tomorrow actually if something wrong happens, I mean the consequences are really bad.
How do you, is there any methodology in which an item which has been reported in CAM in the past can move out of the CAM scenario in future? And what is the process, what is the documentation required?
Now, for example, just to give an example, let's say the prior period there's a CAM which is reported. The current year, actually the standard says all CAMs which are affecting the current financial periods have to be reported. Now, for example, if there's a CAM which is already there in the previous year, that should also be part of one of your matters for testing. For example, that you need to actually test if that CAM is still a valid CAM for the current period, for which you will have to perform audit procedures. Now, just for example, there could be, to give a simple example, I mean, it could be with respect to the inventory provision, for example. The previous year you had a CAM saying there's a severe, let's say there's a complex calculation that is being done for the inventory provision based on the industry of wherever the client belongs to. However, this year, let's say the company has stopped providing for inventory. If there is no effect on the current financial statements, then obviously that will not form part of your CAM.
So if you're saying it's an industry level initiative of inventory provisioning, which is that irrespective of whichever period in future the same provision, unless the company stops operating in that industry, it will not move. How I currently look at CAM, which is in fact some of the international listed companies, that CAM are almost like the basic accounting requirements, which is a testing which an auditor will perform in some fashion or the other, except for the qualified areas or certain extreme litigational scenarios which are there, which has been brought out specifically. In all other cases, these are going to be ever repetitive contents which are
correct.
Seen in there.
But however, I mean, there could be issues where there could be scenarios where a CAM which was reported earlier may stop being reported as CAM also, for which we need to have justification and we need to have adequate documentation for that. There could be scenarios. Now, for example, litigation itself you can take. There were a lot of litigation cases provision was made and all that. Let's say all the litigations are over, there are no more litigations, so that particular point might get dropped. If there are no litigations, or if there is no, let's say, complex calculations being involved, or significant estimates being involved. So it depends on each and every case to case and the circumstance we need to take a call.
For dropping a point from CAM, do we need to be in concurrence with the previous auditor? Because unlike the other matters which is in the...
No, I think it is like when you are the incoming auditor, you are entitled to use your own professional judgment. So you don't have to be in agreement with what the previous gentleman has put as a CAM. So long as you are able to justify that you are satisfied that there is no CAM. You don't have to. As a matter of professional courtesy, what we do amongst our own professional brethren is that we, as a courtesy, we probably warn the incoming auditor, we tell him that these are the matters, you may kindly take care of it appropriately. Or you may want to cross-check with him, is there anything there?
Should the business decisions of the management form part of the CAM?
No sir, I don't think we can ever cross the line of our responsibilities as an auditor and get into the proprietary aspect of the business. A brilliant question. Unless such a decision is tending towards the risk of fraud there. If you are, as you rightly asked, there's a 500 crore fund diversion which is happening to an associate company, and you are not satisfied with the explanation given by the management, then I think you are entitled to probably put that as a qualification itself more than a CAM. Yeah. But I don't think we can ever question business decisions. Yeah.
One more point, somebody was asking about continuing of the CAM and or dropping of it. Every year is the independent year. Secondly, let us say that we have taken some, like a simple CAM is that way, management decided not to cover the insurance. So it will come as a key factor. Next year they go and cover up the insurance. Both. Like gratuity for example. Take anything where your key point comes because it has got effect on the financial. But the moment they take, this is one of the circumstances where CAM can be dropped. If you want, you can give a note in the CAM saying that earlier your CAM was dropped because action has been taken.
So gentlemen, just on that, the standard does not allow you to give that sort of a wording.
Okay.
You don't have to put any para. You can actually put that in work papers at close.
Yeah.
Okay. It not form part of the audit.
That means I will not answer the CAM in the
Absolutely, you will not.
Yes, there is no CAM for the current
There
year.
are no camps for the current.
Excellent.
Sorry, sir. Bit differ on that particular point, which is not for anything else. Sorry, this is again a viewpoint which is to assist for. If it can be changed by an event happening or not happening, which is that if it can move out of CAM or not exist CAM, unless there is a significant change in the operations of the company, by saying, say an insurance policy taken, not taken, will make a difference on CAM, which is that it is never a matter of CAM, either in the first place, or it is a scenario where, because it's not a scenario where risk is covered, it is even if risk is covered onto it, you will refer saying that we have verified and risk has been adequately covered with the management by way of an insurance policy, and you continue to report in CAM. There is no reason to get out of CAM because this year they will insure, next year they will choose not to insure again, and anything like that. That's the most of the international financial statements have never changed anything else new and have not included also anything drastically. They are replicated across the industry. You find all the, in fact, revenue, cost, and all the aspects, almost all the accounting policies are got into the CAM in some fashion or the other.
I think you are very right. I think they have standardized, but they are not overly standardized. And generally, typically, how these operators, all the big four partners at that level would probably agree that this is what I am going to give, so that there is no shock to the investor community, because you are dealing with very large funds, you are dealing with large investors, and you wouldn't want to have too many questions coming up in AGMs. So there is a friendly sort of conversation, dialogues which happen between these large firms on a regular basis on what is CAM and what is the responsibility.
How do you differentiate between the way of reporting, let us say CAM and emphasis of matter paragraph and other matter paragraph?
See, as the standard mentions, the standard specifically says that key audit matters are those which are of significant importance. Okay, and emphasis of matter paragraph and other matter paragraphs are those where you need to highlight specific matters, and there are specific criteria or conditions which are given where you can actually give it as an EOM or another matter paragraph, and those which you can actually give it as a key audit matter paragraph. So I don't think you can have both places. You can't have a CAM as well as an EOM.
No, actually, to supplement Vinay's answer and to answer your question a little more specifically, in case of a CAM, the concept of significant audit attention, which is different from an emphasis a matter, where the concept is to facilitate users' understanding of the financial statement. So both are totally different concepts that we are talking about. In case of a CAM, these are matters of significant audit attention. You are getting into the key matter, you are getting into the strategic response, you are getting into the procedures performed by you, you are ultimately arriving at the findings. That is how detailed your CAM will be. And in emphasis a matter, there is none of these, but you still would like to put it because it enhances the user's understanding of the financial statements. So both of them are conceptually different from that perspective, and each will have their own place in the audit report. Yeah. So here in CAM, well, this is something that I believe is very important. That is your judgment. Here, I believe something will be important to him. That is his judgment, which is what you are putting in EOM. So that is a very, very subtle professional judgment that we have to exercise before we distinguish between EOM and CAM.
Sir, but all of EOM should come in the CAM.
Will never, need not necessarily. Will not also. Yeah. That's a point. In case of CAM, it is your judgment that it is of significant attention to me. Whereas in EOM, it will help him understand better. So there you are helping him understand. Here you are trying to tell him that this is the risk I perceive, this is how I understand. So both of them are little different, and we have to probably deliberate a little more. Yeah, live cases. Yeah.
There are a lot of questions coming already. I think we can formally have this as a Q&A session if there are many more questions coming.
Qualification in the IFC or anything in RO report, would that impact CAM?
For example, some of the illustrations that we just saw, we saw the risk and we also saw the response, where you draw reference to the controls that you have tested. So if there is a qualification, definitely it need not be a CAM. I mean, what I say is, because it is, again, in IFC you may qualify the controls with respect to specific processes. It could be with respect to revenue, order to cash, or purchase to pay, or whatever. But here, CAM, you are addressing individual matters, and where obviously you can't give an opinion. In IFC, you can still give a qualification, and there can still be key audit matters with respect to specific matters.
In case of IFC, if you are given a disclaimer of opinion, I have personally cleared a lot of reports with disclaimer of opinions. To that extent, the entire thing would become a CAM. And I would, as an auditor, put it that the company is in the process of setting up its internal control system, which is the key. And I would not probably venture to it, but I will still put a procedure that we have done extensive or substantive audit procedures to get comfort on the account balances, and accordingly we are proceeding to issue.
There is also one of the FAQs that have been which addresses this particular point. If there is a disclaimer, whether a CAM can be issued or not. If disclaimer is particular specific component, you can still give a CAM.
So if there is a scan after this particular scan report, then what is the responsibility for it?
The question is, if there is a scam after the scam.
I think if there is a scam and the matter that you have put is in CAM and not a qualification, I think we will be definitely made to answer as to how we determined that it was a key audit matter, number one. Number two, people will be curious to look at our audit evidence we have in our files and will test us on the sufficiency and appropriateness of the same. And now we were convinced that it was a key audit matter, not a qualification.
No, subsequently.
Yes, that's exactly the point.
It's a refer to ICA for legal disciplinary action.
Definitely, I think we can expect action to be taken against the concerned 100%.
Because that
is why your documentation will be great help. That is why if you see in the standard, one of the important things that we mentioned was the auditor's evidence should be persuasive and should be quantitatively sufficient for you, and it's most ideal for you to get a third party evidence. If you don't have either of them, then I think the concerned member will be definitely facing a big issue with the institute. Should there be a scam after a CAM? What's it?
A scam without a CAM is much more worse off.
Absolutely, the scam without CAM is much more worse off. So that is why I was telling Vinay, we were discussing in the morning, whilst members are today grappling with great opportunities in GST, great opportunities in IRB, great opportunities in everything other than key auditing. Suddenly you find that the standard setters and the regulators have surreptitiously and quietly introduced this standard SA 701, casting, as you rightly said, as one member rightly said, onerous responsibilities on us being a member. And in case of a large listed company, if you are signing, you are at a grave, definitely, you are at a definite challenge.
So this is a part of the annual filing in the ROC.
No, this will be part of the audit report, yes, and obviously that is going to be filed. In case of listed entities and in case of unlisted entities, if you voluntarily choose to adopt this standard. So you have to choose whether you want to put in private limited company something as scam or not. So you actually require much more expertise, experience and deliberations before you decide.
Some of the matters are covered under thorough, for example. So that need not necessarily again should come on camp or you feel again.
I would deem that to be matter of professional judgment. You are very right. It is possible something good still can come in camps. Because thorough reporting responsibility is separate. This reporting responsibility is separate under this standard, so it's possible that I would not be surprised if you are reporting in core about a fraud, big material fraud, and you are putting that as in CAM, and then you said that these are the audit procedures that I put, like you're talking of a major fraud, and then you say that is a major risk. My response is forensic audit being done, third party evidence obtained, money recovered, case has been filed, the amount has been provided for in the books, and then you can say that we are satisfied with the steps taken by the management regard could actually be part of your audit.
Something like in real estate companies, let us say fixed assets are not in the name of the company. Our inventory is not in the name of the company because CARO's latest requirements, whether the assets are in the name of the company. If it is not there and it is significant, of course, materiality and significant is very important. But I think that requires
100%. It could be possible. Very much possible.
But when they are giving the cover itself, you list out yes, these are the properties are not in the title is not in the name of the company. Then what is the significance again to include in the cap? Is again
it's between, it's a very judgment is a word which I can use.
Because if it falls under a CAM, then obviously we'll have to.
Sorry, I just want to add one thing. CARO is disclosed, whereas the key factors are what are the key things which are affected. You disclose. You don't qualify in the CAM. I disclose only whether assets are in the name of the company. So you don't give an opinion because assets are not in the name of the company, whether it is true or fair and all that. It's an additional information. That's what I think.
Thank you all the members for your patience hearing.
Ladies and gentlemen, on behalf of Bangalore branch, I would like to take this opportunity to formally conclude today's breakfast session with a formal vote of thanks. On behalf of all the members present here and on behalf of Bangalore branch, I thank both of you, sir, for an excellent presentation. Big round of applause, sir, ladies and gentlemen. As a token of appreciation and gratitude, we would like to present a memento. I request CA sir to kindly come forward and present memento to both of our speakers. Big round of applause, ladies and gentlemen.
Incidentally, Vinay was article under Mr. that way.
Thank you so much, Dagya sir. Going forward with the future sessions, On 8th August, we are having study circle on the topic taxation of transactions and securities. That is on Wednesday evening. Next Saturday, we are having one-day seminar on tax audit and ICTS. And 16th, 17th and 18th, 19th, we are having 4 days advanced GST course for chartered accountants. I request all the members to kindly register and take part in it. Thank you.